And I think when we look at today's reversal, certainly a good move off the lows, but we have to ask the question, has there been enough fear yet in this market? And our view into that world is put calls. Have we seen big spikes in put volume that is often present at or near a good tradable bottom? And I think so far, this decline has fallen short of those thresholds.
And here we're looking at a chart that shows the put-call ratio. That's on the lower part with all those blue squiggly lines. And I assume that what you would like to see in the put-call ratio are more of those high highs, right?
Exactly. And what you tend to see historically is a number of days, 6, 7, 8, 9 days, where you'll get put calls up into the 140, 150 neighborhood. We really haven't seen any of those days during this corrective phase. So I think if you look at some of the other sentiment data as well, there are still more than twice as many bulls versus bears in the II work as well. So we think there's more work to do on the sentiment front into the first quarter of 19 before we're all said and done with this corrective phase.
If the sentiment, the fear gauge, got to the levels that you think there, the put-call ratio gets to the levels that we just were illustrating, what would that signal to you in terms of what I should do?
I think it signals the type of stress that often presents itself near a bottom. Now, that's step one. Step two is we need to now see some genuine signs of momentum coming back into this market, and I think leadership is a very good tell. I don't want to see the same tech stocks leading as we see, for example, on this reversal today. We want to see stuff like high beta outperform low beta. We want to see stuff like small caps outperform large caps, and largely that has been elusive over the last several weeks. So the chart we have here, this is high beta versus low beta. Even today, that is making fresh relative lows. Those are the type of inputs that really need to change for us to flip the switch here.